A new report saying Sarepta would need to conduct new studies in order to show the FDA that its muscular dystrophy drug Elevidys is safe. And just this morning, EU regulators not recommending approval of that treatment. As a result, that stock is down another 13%. Joining us right now on that and what to expect from the other biotech names reporting next week is Salveen Richter, lead biotech analyst at Goldman Sachs. And Salveen, let's go ahead and start with the news of the day since it's out with Sarepta. Just digging through this is a stock that is now down 92% year to date. What happened here? Is there hope for a turnaround? And this is a big deal. You now have 3 people who have died, non-ambulatory people who had this disease versus the ambulatory people. But how do you look at it as an analyst?
So it's really unfortunate for the company and for patients. Essentially, they have a gene therapy drug for Duchenne muscular dystrophy, which is a disease where these patients progress to the point of not being able to walk. And what's happened here is they've had very advanced patients react to the drug and end up with liver disease or acute liver toxicity, which has resulted in deaths. And so at this point, we've had 3 deaths. And there's really 3 things that need to play out here. One is the company needs to work with the FDA to determine if there's a way to mitigate this risk. And so they are thinking of how they could include another immunosuppressant on top of the steroid regimen. So they need to agree upon what that trial needs to look like. The second concern is they do have debt, and they also have revolving credit that they need access to, or they need to be able to fund based on a revenue level. And then third, they just have to solve for growth on the forward here, because they can't just be predominantly focused on this gene therapy revenue stream, of which they have some risk with their portfolio next year. So
what's the risk with the portfolio next year?
So they have 3 drugs on the market for Duchenne that use a different mechanism, and all 3 of them will have confirmatory trials. And so there is the possibility that if these don't work, that their drug could be pulled off the market.
Wow. There are questions about what this means for gene therapy writ large. It's shown an awful lot of promise. There are lots of rare diseases that people have hopes that this could eventually cure. But big headlines like this and a crackdown from the FDA raise concerns about what it means just for innovation in the industry writ large.
I think innovation will continue. The big question here is, how do you optimize? We're talking about generation 1, so how do we get to generation 2 and 3 and make it safer? It hasn't just been safety. There's a payer question with regard to paying for these high-priced drugs that are one-time potential cures. And so there is read-through from Sarepta to some other companies, but there's also cases that are very different. So I think we're just going to have to look at this on a case-by-case basis.
Okay, why don't we talk about what to anticipate out of biotech for the earnings season coming up? You have a number of stocks that you have a buy rating on: Biogen, Amgen, Regeneron, and Vertex. What do you expect from the stocks that you think have a pretty good positioning right now?
Yeah, I mean, we've had quite a few years here of negative earnings revision cycles for healthcare and for biotech. And so what we want to see, is numbers, right? That they're achieving these numbers. We've started to have some stability. 2Q tends to be a stronger quarter. And so when we look at some of these names like Amgen, for instance, or even Alnylam, which will transition to a profitable large cap this year, we think they're positioned really well to put up good numbers. That said, the street's also positioned in these names, and they've moved into the quarters, so I think they have to put up these good numbers. But we're also very much going to look at 2 other factors. One is launches. There have been quite a few drug launches that have played out this year, including HIV for Gilead, that we're going to be watching, and then pipelines beyond numbers. And so Alzheimer's disease is starting to be a focus for the second half again, as is pain, as you look at a company like Vertex.
What about Gilead? You've actually got a neutral rating on that, despite the HIV drug that they got approval on this. Why is that?
So for Gilead, they do have loss of exclusivity for their HIV portfolio when you look to the next decade. And so for us, it's a question of whether we can see that offset within their internal programs right now. But the focus very much is going to be the execution on the recent approval of their HIV PrEP drug.
Yeah.
And then I think second and third, we're going to be looking at the exposure of Medicaid for any of the changes that have played out, or for any drug pricing aspects that could play out there. And then, as I mentioned, just the pipeline and additional growth levers outside.
I mean, the stock is up almost 50% over the last year, too.
It is.
So you're looking at a stock that has seen a run. When it comes to Moderna, what are your thoughts? You've got a neutral rating, I think, on that as well.
Yeah, Moderna has some pull and puts. So at this point, I mean, it was a difficult name in the context of mRNA and COVID and all the regulation that was coming down on it. What we need to understand now is that they can make numbers, and then also that their pipeline starts to work outside of respiratory
You're talking
viruses.
about cancer and some of the things that they've been working on to try and have, I don't know if you can have a vaccine for cancer, but that's kind of where they're headed.
Exactly.
Yeah.
The cancer vaccine is key.
Okay.